Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, 675th video, baby. Yeah! They are just going to keep coming at you. Traders, in the last video, we showed you the calls, the magic OMNI calls, right? 1577 call, we reached 1576. Then we had the 668 call, we reached 666. Then we had the 1290 call for 2010. Do you know where we hit on Friday afternoon last week? Whoa, baby, 1290, dead on. The call was achieved. Now, what's going to happen? This crap goes off the board for the moment, right? We've hit the 1290. We expect the 1300, part of the 1290 call, to most likely be hit on Wednesday. This video is being filmed on Tuesday night for Trading Wednesday. That's January 19th, 2011. Traders, as you know, futures trading is risky and can cause substantial financial loss. If you do not have risk capital and you do not understand this game, please do not try and play it. You got to learn it first. If you don't understand it, come visit me on my site. It's www.livewithoscar.com. Come into my free trading rooms and allow me to help you out. All right, so traders, we hit the 1290. We have a call to make for 2011. As you know, I professed I will not make this call on YouTube. It will be on a television station somewhere. Well, we've had some action since then, and we've done some negotiating, and I promise to do the best of my ability to bring you that call as soon as possible. Negotiations are in place. All right, so let's hope it happens. A round of applause for the OMNI 2011 call. I cannot wait to give it out. Now let's get sensible. Forget about the long-term stuff. We're trading for Wednesday, right? And on Wednesday, we have a green OMNI in NASDAQ, S&P, Russell. We like them. We think they go higher. Traders, I always applaud my green OMNIs because we always want the market to go higher. Now, over the weekend, we hear about Steve Jobs, and he's stepping down, and he's the infamous Steve Jobs, and you know what? He's a great, great man. What I wrote in my OMNI Sunday night, or Monday night, I should say, traders, basically, if Steve Jobs' dead carcass was on the steps of the NASDAQ, it would not stop this market from going higher, and lo and behold, that's exactly what happened on Tuesday. We went higher. And I'm here to tell you, Steve Jobs and Apple is a great company, but it is one company in a huge index. That index is poised to go higher. With or with not the infamous Steve Jobs, it is going higher, and that's that. So do not fall in love with the downside on any of these dips. Traders, we love buying dips, as you know. And now that we've made the 1290 projection, that is not a high. We've never once claimed that would be a high of any sort, traders. We claimed you'd get the 1290 in the year of 2010. We basically got there. Bravo. Now we expect, of course, the market to plod along. The bullishness is in. It is starting to become a self-sustaining rally. Let me repeat that. It is starting to become a self-sustaining rally, traders. The Fed kicked it off into high gear. No one believed it. The OMNI certainly did. We told you day after day we expect what the Fed did to take us much higher. The Fed gave us the jump start. The sentiment now out there in the street is that people are getting happier and braver and thinking about getting out of precious metals and getting back into stocks. And you see it in the result of the advance in our stock markets. Traders, listen, a buddy of mine calls me up during Christmas, the night before Christmas, or maybe 2 days before, and he goes, Oscar, you're not going to believe this. There's over 350 people lined up at 2 in the morning in front of Modell's because they're looking to buy Michael Jordan's new released sneakers for $175 a pair. $175 a pair. They're lined up 350 deep 2 nights before Christmas. You're telling me that we're still in a recession? That is not how recession-minded Americans think. They hide their money. They run like squirrels, put it in the bank, dig holes, buy gold. You know that. But when they change their opinions and they start to feel happy again, they start to do things like buy $175 sneakers when next door to Modell's is Walmart and you can get a pair for $20. That is no longer a recession. That is a heated up economy starting to rock and roll. Traders, what is the #1 driver of U.S. economy? Everyone knows it's consumption. Us crazy Americans buy everything out there and consume it and throw it in the garbage and buy more. Well, people are starting to do that again. You see the result in the stock market. I am here to say this thing continues. Technically, fundamentally, every other thing that you can think of. Traders, with no further ado, I'd like to show you some charts and show you why this thing has to advance further. Let's go look at some charts. Okay, traders, this should be a demonstration as to why the stock market, the Dow Jones Transportation Average, the NASDAQ, the S&P, the grouping, needs to continue to move higher. What you are looking at is a bar chart. It is a weekly bar chart, which means every one of these green bars represents a whole week's worth of trading. What you see overlaid are 3 averages that we use at the OMNI Trading Academy that keep us in tune with the longer-term market direction or the trend. Check this out, traders. Look at this. I have a little box around where those averages congregate. When they come together, they begin to separate, but when they separate, look at the large move that takes place. They come together again. Look at what happens. A huge rally ensues as they separate. That was phase 1 of our recovery. Then we went into a little bit of a sideways or a flat. They came back together, and look at the rally that's ensued since. They're just starting to separate. Traders, look at the distance between here when they congregated and here when they finally came back to one another. We're only halfway through a phase that looks like that. So look back. They come together, they cross, boom, big downward move. They come together, they cross, huge, huge, big upward move. They come together again, they never really cross, they hang out a little bit, and whoop, boom, another move begins. If this is phase 1 and this is phase 2 has more upside coming. That's your weekly on the Dow Transports, the leader. Let's look at another chart. Okay, traders, the next leader, the secondary leader, the NASDAQ, which, by the way, has been doing all the leading so far, so we'll call it the secondary leader, but in the beginning of this race, so far, this guy's been the first one out of the chute, and it doesn't look like he's giving back the leadership. However, NASDAQ weekly bar chart, the same exact thing, same averages on a weekly, but now the NASDAQ, look at when they come together and cross, big, big move ensues, they get wide, they come back together, and then look as they separate, huge rally ensues. They come back together, secondary phase, this was phase 1, this is phase 2. Does phase 2 look halfway baked compared to phase 1? What do you think?
Not even.
Not even, right? This is probably not even halfway there. It's not 50% of the way. I think that's very bullish. So you've seen the weekly in the transportation average and the weekly in the NASDAQ. 2 of our leaders of the S&P. Let's go look at that S&P. Okay, traders, now the S&P, the big kahuna, baby, the one we're all trying to trade every day. Here it is once again. They come together, our OMNI averages, and look at the plunge that comes in the market. When they come back together, the rally ensues. They separate, big, big rally. You get into a flat or a sideways. They come together. They begin to separate. Once again, look at the size of this rally and look at how small this one is so far. It needs more room. I think we continue on. There will always be pullback days. But this is very strong, traders. The evidence is in our favor for a bull market to continue. So those are proprietary averages that we use here at the OMNI Trading Academy. They keep us in check with the longer-term trend, and this is telling us the longer-term trend continues. Let's go look at another chart. Okay, traders, many OMNIacs have been following me through this bond market after we called for the top up here. We basically missed getting in, sad to say, but we missed that trade. And it went all the way down here without us. Look what has happened since, traders. Basically, we have what you would call a bear flag. Here's your flagpole. I think we've broken out of the bear flag. I think we've come up to test this line again, and this time we've hit it, and it's a good sell area. I think we have our ticket to now get short bonds long term and hold them all the way through down here. We have targets that are much lower. We're trading in the 120s right now. We expect the 114s and then even lower than that. I think we're finally breaking down out of that flag, traders. indicators would point to that direction. The bullish S&P NASDAQ would point in that direction. And coming down out of the bottom of this flag certainly is starting to look like we are breaking down. So I think we have our sell ticket in bonds. I will keep you posted at the site. I'm not giving direct numbers right here and now, but we do have an Omni setup for the bonds. Make sure you contact me if you are a high-level Omniac in the trading rooms. So, traders, you've seen my charts. That is my technical argument for why this green Omni, baby, stays green. Now, I'm going to reply back to a bunch of people who have been writing letters to me, emails, letters, some feedbacks, and out of several hundred over the last week or so, I will say that only 3 have said, Oscar, looks like the market's going to go higher. So, the segment that is coming up next is, Oscar, don't you think? And there's a reason for that. Oscar, don't you think? Listen, just about every letter I open up, I know right away if the guy is bearish or if he's using his opinion over the analysis, because the email starts off with, hey, Oscar, don't you think the top is in now? Hey, Oscar, don't you think it looks like maybe technically we're running out of steam? Hey, Oscar, don't you think that we need to have a pullback? Hey, Oscar, don't you think? And I said to myself, there's only one answer I have. Hey, traders and Omniacs out there, don't you think if I thought the top was coming, these videos would be about the top coming? No, I do not think that the highs are in. Why would you project your thoughts onto what my answer is going to be? You guys start these letters with, Oscar, don't you think the highs are in? Well, come on, have I done one video at all? Have I said anything to make you guys think that I think the highs are in? So, listen, until you hear me say, like in bonds, the top is in, I guess I should say, don't think for me, don't think for yourselves, think for the analysis. Because traders, what I just showed you in that chart segment does not point to the downside. I don't care if Jesus himself thinks it's going down. You know what I mean? Oscar, don't you think? I don't think it comes directly from the charts. I have no opinion. You know why? I've been in this business for 29 years, and I've learned that my opinion is about as good as yours, or yours, or yours, or yours, or anyone else's, and our opinions are almost worthless. The only opinion you should ever have when you trade these markets is technically from the chart. What does the chart say? Well, that's my opinion. That's it. So, Oscar, don't you think it's bullish? Absolutely, I think it's bullish because the charts say it's bullish. Oscar, don't you think the top is in? The next time I think the top is in, I promise to do a video about that. Until then, the top is not in. We go higher. Pullbacks need to be bought. Do not fall in love with the downside. What does it mean? It means that if these markets come off, especially if it's a quick dot down, find an area where you see support on your chart and get in and buy. That works. That works in a bull market. Buy the pullbacks. Will it work every single time? No. Will it work between now and the next 5 to 10 years that this bull market is going to go higher most likely? Yeah, it sure will overall. Buy the dips, ride the thing higher. Don't look for a top. Don't call a top. Tops call themselves. With that in mind, I've been getting signals in the precious metals, especially gold, that the possibility of a top is forming here. Traders, you know I will not call a top until it calls itself. I am not the guy who stands there and says the top's in now when it's not in. When it calls itself technically, I will call it. I want you to know this. Omni lately has been locking in on the gold and going, Oscar, I think the gold's topping out, and I'm listening to what it's saying. So I'm starting to tell you that. Is it done? No, Omni doesn't think the gold's done yet. Is it starting to top out? Yes, Omni thinks it's starting to top out. So I will absolutely let you know, like the bonds, when I think the top is in, and then you guys that like to just go short at will, you can find your spots. Many guys ended up short bonds. Our crew didn't because we were waiting for a specific level, but we got those bonds for tomorrow. We'll see what happens. Anyway, for the precious metals, the gold especially, you know, platinum, palladium, silver, not as toppy yet, although silver looks a little scary. But I think the gold is building what will be called at some point from us at the Omni Trading Academy as a top. We'll see. I'll let you know when that comes. For now, we are bullish S&Ps, bearish the bonds, And the currencies, I think you got another day or two of the euro moving higher, and then it's going to run out of steam, but we'll deal with that when it happens. Traders, there's a big cactus skin out there. It's called the S&P. Forget the grains, forget the meats, forget everything else that grows out of the ground at this point, and trade the S&P. It is the best technical trader I know of all the markets. Technically, the stuff I show you on this board works best in the indices over all the other markets. I think it works fantastically well in all of them, but the fact that the indices are not weather-driven, they are not driven as to if we get a flood or not, they're not whether or not the crop comes up, it's not whether or not enough steer came in. Those aren't factors in the S&P. That's why technically, you know, indexes will work better with your analysis. Now, again, if you do prefer to trade those other markets, these techniques work very well, but you could be blindsided by bad weather, bad report, you name it, where I don't think you get blindsided. In the indexes, they trade the way they're supposed to trade. Anyway, that's my take, that's my story, and I'm sticking to it. All right, let's get out of this video. Traders, give me a call. Type there, 970-629-4755. Don't forget about OMNI Camp. It is February 25th, 6th, 7th, and 8th, I think. Yeah. February 25th, 6th, 7th, and 8th. Continue to send in your applications if you'd like to qualify. Anything else I have to talk about in this video?
Yes.
Oh, yes, mobile phones. Traders, if you'd like to follow the OMNI on your mobile phone, and you can see these YouTube videos as well, you go to m.livewithoscar.com, and bingo, bango, you got it right on your Android. All right. One last thing I see being held up for me to say is our chart. Move that around for me, Mike. There you go. Now I can see it better. I'm being cued. Chartupload.com. It's our chart uploading service, traders. You can use it to upload charts anywhere you like, but we love for you to use chartupload.com when you're in our trading rooms, because we know it. We know it's virus-free. We know it works really well. We can help you if you have a problem. So use chartupload.com. Come to my rooms. Never, it's gone, it's off the board. Never trade alone, which is usually there. Traders, it's really hard to figure out these commodity markets with all the news coming in and the way the charts look and the guys on TV going blah, 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 you know, talking heads. Well, it's really hard to figure out what's going on. If you're sitting alone, it's really hard. So don't sit alone. Come join the ever-growing army of Omniacs in my free trading rooms. It's at www.livewithoscar.com. You will not regret it. I'll see you there. That's it. I'm getting out of this video. Remember, keep your emotions out of trading. One of the best things you can do to help keep your emotions at bay is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah, baby, you gotta love these videos.
Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.